to the sugar sector. Sources to CNBC Awaaz suggest that Cabinet may soon approve an increase in ethanol price. To discuss this and more, Prashant Biyani, Vice President of Institutional Equity Research and Sector Lead for Agri-Input, Sugar and Hotels at Elara Securities, joins us now. Good afternoon, Prashant. Thank you so much for joining us. Well, you've seen the story that was done by our colleague from CNBC Awaaz. What are your first thoughts and how does this impact the sector?
Good afternoon. So the move, I will say, is mildly negative in my view. If the government increases only the B-heavy ethanol price, we were expecting some increase in cane juice-based ethanol price as well. Because in the last 2 years, we have seen that FRP for sugarcane has increased, but the last revision in juice ethanol price was only 2 years back. So the cost of production for the ethanol manufacturers have shot up, but not the realization. So it is mildly negative in my view if there is no price hike in the juice ethanol segment. So this is what we were expecting in B-heavy ethanol, price increase of 3 to 5%. So B-heavy ethanol price increase is fine, but we were expecting something on juice ethanol as well.
So if this does not take place for the cane juice bit, and it only takes place for the B-heavy and the C-heavy, Prashant, what is the kind of impact that you are expecting on the margins of a lot of these companies?
So C-heavy ethanol price is same as what it was earlier. Earlier it was in the form of additional incentive. Now it has been in the main ethanol declared price as well. So there's no change in C-heavy ethanol profitability. But I think there will be some downward revision in overall distillery EBIT if we have only B-heavy ethanol price and nothing on cane juice. Because cane juice volumes are also are likely to be decently higher this year, because this year we are seeing full-scale ethanol blending. So that will be a bit margin dilutive for the distillery business.
Understood that. Now let's talk about the current state of operations. Are operations viable in the current set of prices? What is it that sugar companies would be hoping for?
So operations are very much viable. Only in case of grain ethanol, I think the industry would be expecting some price increase, both in your FCI rice as well as ethanol based out of maize. But otherwise, for any kind of feedstock relating to sugar, which is your B-heavy, C-heavy, or cane juice, operations are viable, but the return on capital employed is less. So no one is making losses in sugar-based ethanol, but returns would not be adequate for juice ethanol.
Now, Prashant, there are also talks of allowing exports of up to 10 lakh tons. Now, ISMA wants 20. If this move does go through, what is the kind of impact that you foresee?
So if exports are allowed to the extent of 1 million ton, I think there will be some relief on the balance sheet side, while it would be lower than expectation because we can export around 2 million tons. But I am expecting relief on working capital requirements, nothing much on the EBITDA front, because internationally prices have come down vis-a-vis what they were earlier. A year back, around 26 to 28 cents. Now they are hovering between 18 to 19 cents. So no, not a major impact on EBITDA, but certainly on the interest component part, which companies incur on working capital, there some relief is expected.
Thank you so much, Prashant, for joining us and giving us your take on what is still a developing story. Well, a couple of stocks on the radar.